With that, let's shift our attention back to the market. Given everything that's going on, there are election results pouring in. There's a reversal underway in Hong Kong and China. And we have Anuj right here with us in the studios. Anuj, so I think the Indian bulls have been beaten down quite badly last couple of days. What do you think? Do they have a chance today?
You know, it reminds me of that शेर कुछ दिन की खामोशी पे शोर आएगा तुम्हारा सिर्फ वक्त आया हमारा दौर आएगा. That's what the bulls have always said to the bears. Surabhi, and you know, I made these graphics when the gift nifty was down 120 points, but my sense is market is very close to some kind of a hard bottom. Now, what exactly is a hard bottom? When you have a gap down on a bad news which is already priced in. So if you want to assume gift nifty as some kind of a gap down, perhaps we did see that. Of course, the gift nifty is low. Now becomes your most important number to track in today's trade. China opened after holiday, started with good moves, but has already cooled off quite a bit. And the biggest reason for our market fall has been this risk that FI money is moving from India to China. And that's well documented. Look at what FIs have done in last 5 days. They've sold 50,000 crores of stock in last 5 days. And a lot of that has gone to China. That's what the data would reveal. The West Asian geopolitical tensions have led crude back to $80 per barrel. And there is a probability of US interest rate cut actually being much lower than earlier anticipated. But all of this was priced in by the market at 330 yesterday. Dow futures were down, US Treasury yield was up to 4, crude was already at 80. And the market had already also priced in, by the way, the state election verdict because the exit polls were out. So in that sense, a lot of the bad news was priced in. And now a couple of factors. Yesterday's advanced decline was 1:9. I mean, these are the classical signs of bottom formation. FI is turning net short on the index from being 83% long earlier. It's the first time that FIs have turned short on index since August 19, and it's the highest shorting by FIs in a single day since June 13. Everyone remembers the June 13 date, right? The put-call ratio, that's come down to 0.7. And one more data point, for last 1 year, the Nifty has not violated the 100-day moving average except on the election verdict day. And the current 100-day moving average is somewhere around 24,300. The only thing I would add is it doesn't matter where the market opens today. It matters where it closes, because the closing has been quite bad for the market. For confidence to come back in this market, for this theory to be right, you need 2 days of Nifty closing at the highest point of the day.
I mean, you know, this was saying we need a daily positive close to work with. I mean, point taken, Anuj. Thank you very much for that. We'll see if that does start to happen. We can see the broad shape of it.